Welcome to Livewire's Fund in Focus. My name is Vishal Tekshilani, and today we're putting the WAM Global listed investment company run by Catriona Burns from Wilson Asset Management into the spotlight. Catriona, welcome.
Thank you. Thanks for having me.
Of course, no worries. Now, Catriona, I want to start off by congratulating you on a stellar result last month. You increased your dividend to a record 6.5 cents per share, plus you gave shareholders 4 extra cents, because why not? Now, that highlights the strong value that LICs provide. Now, what's fascinating to me is that excluding the special dividend, your yield is sitting at about 8%. Now, I want to get to how you get to a position like that, but let's start with the foundation. What is the WAM Global investing philosophy?
The investment process that we use is the same that's been used across Wilson Asset Management for the last 27 years. So we use a process where we focus on a company's industry position, the quality of the management team, the earnings growth potential, the valuation, and then try to identify catalysts. We're looking for quality undervalued growth companies around the world. And we'll hunt anywhere. We tend to love small mid-cap companies because that's the genesis of where Wilson Asset Management started. But yes, that's the investment philosophy that we apply.
Now let's think about today's market. You've got lots of options, and when it comes to global equities, one option that people are leaning into is low-cost ETFs. But I'd love you to make the case for why take the global route with an LIC.
We think there's a lot of advantages from the listed investment structure as opposed to the ETF structure. And look, most of the ETFs in Australia are passively run ETFs, which concentration risk is obviously extremely high right now in terms of the market. An index ETF does not pay attention to whether an individual valuation of a company is outrageous, whether the management team that runs that company is good or not, whether the industry position of that company is deteriorating or improving. So there's a lots of reasons why you want an active manager to be picking stocks for you rather than an index ETF. So we think, and the other ability of a listed investment company to accumulate profit reserve and stream dividends over time, we think is another really big advantage of the listed investment company structure. We think there's lots of reasons to own a listed investment company over an ETF.
Really love to hone in on that profit reserves point. Help investors understand what it is and what I think about unique it is. What I think is unique about it is you can generate frank dividends from investing in global equities, which is something you can't do in ETFs. So what
Absolutely.
are profit reserves, and how do you manage your profit reserve position within WGB?
Sure. So yes, the profit reserve is a reserve which the profit is assigned to this reserve over time and enables you to, instead of in an ETF or trust structure where you pay out any profits immediately straight out to the investor, in a listed investment company structure, you can hold the profits in the profit reserve and gradually pay them out over time. And we find that, particularly many of our shareholders are self-managed super funds, and they love the reliability of regular, steadily increasing dividends rather than one sugar hit and then nothing if you don't generate profit in the next year. So the ability to accumulate profits in the profit reserve and then gradually pay them out over time means that they get a consistent yield.
Okay, so you can get the growth from your underlying management of the portfolio plus the stability side of things from managing the profit reserves.
Absolutely. And then the other point, as you said, on the franking, we are a company, an Australian company that pays tax to the Australian Tax Office. So we generate franking from paying tax, which isn't the same as a trust or an ETF.
Where are you seeing the most compelling opportunities right now? Perhaps if you can give me 2 to 3 names and link it back to your investment philosophy.
If we look at the size company, we definitely see the best opportunities in that small and mid-cap end of the market. A lot of the returns for general equities markets in recent years have been driven by large cap stocks and a particular group of large cap stocks, that Mag 7 group. So we think the best ideas are found in that small mid-cap end of the market. We're seeing 20-year lows in terms of valuations for small mids relative to large. So it is a great time to be hunting in that end of the market. And then for us, it's about finding those businesses that really fit our process, where we think that they can sustainably grow over time, where they have got those very high quality management teams. So businesses like Hemnet, CTS Eventum, RB Global, etc. We think are great examples of this.
But you can also hold large caps, right?
And we can hold large caps where we see opportunities, yeah.
Okay. How do you manage risks within the portfolio?
So we manage risk via position size. We're very much aware of both our sector bets, our geographic bets, and then our position sizing is used to manage risk as well. We have the ability to flex up cash if we also see extreme risks.
Lastly, premiums and discounts, something that LIC investors need to factor in. What would you say is the message for investors if they see an LIC trading at a premium, trading at a discount, and then you as the manager, how do you manage that from your end?
Yeah, look, we've probably been somewhat unique in the market over time, and it's very much a Jeff philosophy in terms of being very open with our shareholders that when you're trading at a premium, you're trading at a premium to the value of the underlying assets. So, I mean, he's always, we don't provide financial advice, but he's often selling at premiums and buying at discounts. And our view as an organisation is that a discount is an opportunity to pick up $1 for 80 cents. And so take advantage of those opportunities. And when they're trading at premiums, perhaps sell some out. So we think it's an advantage, not a disadvantage of the listed investment company structure.
Wonderful. Catriona, thank you so much for your time.
Thank you.
I hope you enjoyed this video. Please don't forget to head to livewiremarkets.com where you can find all our fund in focus content. Don't forget to like this video, subscribe to our channel. My name is Vishal Tekshanani. Happy investing.